Hi there. In this video I'll go through my entire workflow to obtain a list of stocks which have just broken out above their existing high and trading range. If you have little or no experience with ChartMill and don't have any knowledge about creating watch lists or how to set up screening filters, I would strongly advise you to watch the preceding videos in this series first, which you can find over in the upper right corner. All the videos in this Academy series are covered in a separate playlist. So if you're watching this video, I'll assume you'll already know the basics about making your own screens and watch lists. If you haven't created a ChartMill account yet, do so first. It is completely free and requires only a valid email address. Without registration, the features are rather limited. Before we go any further, disclaimer alert, in this video I show you my own way of working with ChartMill. The setups from this screen are also shared on our Instagram page and can be followed on a daily basis. Please keep in mind that these setups are in no way an advice to invest. They only reflect my personal vision and serve as an example to show you the many possibilities and advantages of a good stock screener. So what is covered in this video? My basic breakout screen settings, my pre-selection and analyzing those pre-setups in the stock charts menu, analyzing them in the analyzer tool, and then my final selection and some info about order management, and to end the video, how to manage open positions and some different kinds of trade management. My name is Christoph. Enjoy the video. I'll first show you the exact filter screen I use to search for these types of breakout setups. I have several screens, but which one I use depends mainly on the market conditions. Currently the market is performing extremely strong, so I have been using purely this screen filter for several weeks now. If the market corrects, I use another screen that mainly shows stocks that have fallen back to a support level. Maybe I'll make a separate video about that in the near future. There is a separate article available for this momentum breakout strategy in our documentation center, and I'll put a link in the description below this video. The following filters are set for this screen: US stocks only, price above 10, with a minimum average volume of 300,000 and all ETFs excluded. In the past day, the stock reached its highest annual price and the volume had at least doubled compared to the previous trading day. As an additional volume filter, I set the volume of the last trading day to be at least 50% higher than the average volume of the last 50 trading days. Depending on the number of candidates, these filters can be slightly adjusted. The double volume filter, for example, is quite strict. If I notice that there are not enough stocks left, or if I don't find the right setups, I delete the second average volume filter and run through the results again. The same goes for the filter new 52-week high, which can be replaced by new 20-day high or new 10-day high. Keep in mind that this filter is really meant to be used in bullish market conditions. So even if these alternative, less strict filters give no or few candidates, it is a strong indication that the market is a lot weaker. In that case, don't be tempted to withhold lesser quality setups, but be patient until the market recovers before using the screen again. With the screen, you will also regularly spot stocks that have risen enormously during their breakout. If you want, you can use an additional price filter to exclude all stocks that have already risen more than 10% during the last trading day. To do this, go to the Performance tab, select the today's performance and set the filter to the desired percentage. I'll take 10% as an example. Another optional filter, especially if you have a lot of candidates, is to only withhold stocks in the best performing sectors. On the homepage you can see the current performance of the different sectors at the top right. Click on 2 sectors to see the detailed page. Filtering by sectors or industries can be done in the stock screener via the general menu. 3 different drop-down menus are provided. Don't overdo it with these optional filters. The most important thing for this breakout screen remains the price and volume filters. With too many additional filters, you might miss out on some very nice setups, and that is obviously not the intention. Once your screen is set up, it's time to manually scan the basic selection provided to us by ChartMill. We're looking for shares which have broken out above a previous high and a more or less sideways trading range. The volume filter automatically ensures that we only see the results where this occurred with strongly increased volume. This first selection is purely visual and can therefore be done quite quickly, after which they are added to a specific watch list. I personally use different watch lists to group stocks. I use a pre-setup watch list, a setup watch list, and a separate open positions watch list for open positions. The stocks that survive this first round are then added to the pre-setups watch list. From here on, the actual analysis begins. I open up my pre-setups watch list in the Stock Charts application. As always, I start my workflow with two things. First of all, I change the view to two charts. That way I can view two charts next to each other. On the left, the daily chart, on the right, the weekly chart. This top-down approach allows me to quickly visualize how the breakout pattern on the daily chart translates for the weekly chart, especially when I have selected 20-day high or 10-day high as the base filter. This is very important. In that way, I regularly discover that an important resistance level is present on the weekly chart, which was totally invisible on the daily chart. Watch this nice breakout setup in CRC on date of 29 October 2021. And then take a look at the weekly chart where there is some long-term resistance around $50. A resistance level on the higher time frame does not immediately mean that the setup is bad. However, if my stop loss is set at approximately $4 below the entry price, for instance entry at 47 and stop loss at 42, and then I identify a resistance level on the weekly chart barely $3 higher than my preferred entry, I ignore the setup. Next, I check when the next quarterly results will be announced. If the announcement will happen on the same day or barely 2 or 3 days later, chances are I will ignore the stock, especially for announcements the same day or the day after. To do so, select the fundamental view. So be sure to pay attention to that. Even if the results are good, volatility can increase to the point where you're stopped out by a hefty intraday move. In the worst case, the quarterly results are disappointing and the price opens with a huge gap down, far below your stop loss. You definitely want to avoid such things. The stocks that are still part of the pre-setups list are now further analyzed using the Analyzer tool. In the main menu, select the Analyzer menu for this. Open the application in a new browser tab. Then I select the tab Analyze Your Stocks. Via the map icon, I then open my pre-setups watchlist, and from here I can now quickly check a number of other areas. You can get an overview of a technical and fundamental report, but for this breakout strategy I mainly have an eye for the analyst ratings and especially the different price targets and up and down grades. I prefer to see the current price still below the median, mean and high price targets, and as far as the up and down grades are concerned, it is of course a good thing if the stock has recently received a buy recommendation. Once that is checked, I open the full profile of the stock via this button. Whoever wants to include a number of fundamental parameters in his analysis can find all the necessary information via the tabs Estimates and Financials. I personally use this page mainly for the Ownership and News tabs. Via the Ownership tab, I check whether there have been recent inside purchases or sales. The News tab gives me access to all the recently published news about the stock. I wish to emphasize that these factors in themselves are not decisive in whether or not a stock will be included in the final setup list. However, this info is taken into account when I have a large number of really good and equivalent setups to choose from. If, for example, I have to choose between a share whose price is still below the analyst target or one that is already well above it, I will obviously keep the first setup. Each stock is reviewed individually in this way and may or may not be retained for the final setups list. Those that remain are added to the setups watch list, and the pre-setups watch list is then emptied. The setup watchlist is opened in the Stock Charts application, defaulting to a 4-month view and with a number of moving averages, being the 5, 10 and 20 daily moving average. Why these specific simple moving averages will be discussed later in this video. On the chart I indicate the zone where the breakout is occurring, and if chart patterns are visible I will visually display and mention them on the chart. These entries are purely for reference purposes for my trading log. To determine the exact entry, limit and stop loss levels, I use the position sizing tool. You can start it by clicking on the ruler in the top right corner of the blue bar. This will cause the position sizing tool to appear on your screen. In terms of orders, I always use, as far as a buy order is concerned, a buy stop limit order. The reason for that is that the buy order may only become valid once the high of the breakout candle is penetrated. It is therefore a conditional order, the condition of which is that the price must first rise to the set buy level. That is why it is called a buy stop order. Attention, this has nothing to do with the classic stop loss order. The term stop in the buy stop order refers to the set price that must first be reached before the order becomes valid. A limit price is always linked to the buy stop order. This is to avoid that if the price suddenly opened much higher, with a gap up, the day after the breakout candle, the shares would be bought at a much higher price than my minimum set purchase price otherwise. An example to illustrate. Finally, a stop loss needs to be determined. For that purpose, I make use of the position sizing tool. With this tool, you'll be able to see the impact of the applied buy and stop loss level on your available trading capital. Before you can effectively use this tool, you'll have to adjust a number of things at the top of the tool, such as your available trading capital and the risk percentage per position taken. If you want to, you can also enter the broker fees and any other taxes. ChartMill will also take these things into account in the calculation of the parameters, which will be displayed below the input field. Once you've entered the basic data, along with your entry and stop loss levels, ChartMill will show you a number of key metrics, including the total risk and risk per share, how many shares you are allowed or able to buy, how much the investment amounts to on your total available portfolio, and you'll see a red cross if this is more than 25%, and the ATR distance of your stop loss. ATR, or the average true range, is the average price movement per day. So if you set a stop loss that is less than 1 ATR, this means that your stop loss level is within the average daily distance that the stock moves. The chance that you will be stopped out quickly is then considerable. ChartMill warns if the stop loss is less than 2 ATR. For this momentum strategy, I personally use a stop loss of at least 1.5 ATR. Once the order is placed, it is a matter of waiting. At the end of the trading day, a check is made to see which positions have been bought. These stickers are then added to a separate open positions watch list, which keeps track of all open positions. This way I can quickly consult all my open positions and further analyze or adjust them if necessary. For all open positions, I add an alert. I want to be warned in advance when the company will announce quarterly results. To do this, click on the bell icon at the top right of the chart and select Earnings Alert. Select whether you want to be alerted 1 day, 2 days, or even a week in advance. Other interesting options are the News Alert and the Insider Transactions Alert. If you also want to be informed of these alerts, then check the box. Meanwhile, we have come a long way. Screening, analysis, selection, determining entry and stop loss, risk percentage, and position sizing. All essential elements of an investment strategy. The only thing left is the exit if the position moves in the right direction. In the other case, we have our stop loss. I am assuming in this video that an exit always happens with the full position. And I'll show you 3 possible ways of exits, including my favorite exit strategy for these typical breakout setups. Fixed profit levels are based on risk per share associated with the position. For example, if you are long at 68.88 with a stop loss at 66.48, as in our setup for KKR on 19 October, your risk per share is 2.4. A target R1 is then equal to 71.28, 1 time the initial risk per share. A target R2 is twice the risk per share, and so on. If you trade this way, you'll notice that for an R1 fixed target, you need to be correct 1 out of 2 trades just to be break even. In fact, even a bit more if you take the costs into account. If you use a fixed target of 2, you'll already be profitable as soon as the target is being reached in 4 out of 10 positions. The difference after 10 trades is then 4R. With a price target at 3R, 3 out of 10 trades are enough to make a profit. What started as a simple breakout can be the beginning of a strong upward trend. So if you want to hold onto your position as long as possible and you want to profit as much as possible from the trend and the momentum, you could for instance use some simple moving averages to determine your exit. As soon as the closing price is below the simple moving average, you're going to sell your position on the next trading day, or you're going to set a stop loss just below the low of the candle. Personally, I always plot the simple moving average 5, 10 and 20 on the chart. To avoid that you'll have to sell your position too soon after the entry, you could, for example, apply the rule that the exit based on this strategy is only possible if your position is at least in profit, otherwise the initial stop loss remains valid. Perhaps a little less known or less popular are time-based exits. Especially in this type of strategy, which mainly uses momentum, this option is worth considering. The rule is simple. An open position is sold in any case after a predefined number of days, for example 2, 3, 4 or 5 days. The reason behind this is that the breakout itself and the accompanying volume have caused greatly increased volatility, so that even more buyers become interested in the stock and want to jump on board. This creates the momentum we are talking about. But that particular momentum and the strong price rise that results from it can't last. Just as a sprinter is unable to maintain his running speed over a long distance, the same is true for momentum. The time-based exits take this into account by getting out in time before the momentum dries up completely. Because this time-based exit most aligns with the nature of this strategy, it is my favorite way of getting out of position. Which exit strategy you want to use depends to a very large extent on a number of personal characteristics. Someone who is by nature inclined to be in the market for only a short time and to take profits rather quickly will benefit more from the fixed profit exits or the time exits, but will find it much more difficult to maintain the discipline of staying in the market on the basis of what a price does in relation to a number of moving averages. There is no such thing as the best exit anyway. You can be profitable with any of these exit options. The most important thing is to keep your losses small, which is why the stop loss and the set risk percentage are so important. In any case, loss positions are part of every trading strategy, sometimes even several times in a row. In order to know which exit strategy works best for you, you will have to forward test. This means that for each position, besides your effective exit, you also keep track of a number of alternative exits. In the course of time, you will thus get a picture of what works well, what works better, or what doesn't work at all. This follow-up is part of your trading journal. If, for instance, you are currently using a fixed target at which you are going to exit when the profit is twice as big as your initial risk, then it is sensible to also keep track of what the results would be at R1, R3, R4 and R5, to see if another exit strategy could be more profitable. This, of course, requires time and sufficient trades. After all, the amount of data you collect with this must be statistically relevant enough to be able to draw conclusions from it. Moreover, it may be that the difference is mainly due to changing market conditions, but that too in itself is information you can use to your advantage. To conclude this video, here's what you need to know. First of all, I want to emphasize once again that each setup on our Instagram page only serves as an example, to show you what results you'll be able to obtain with a stock screener like ChartMill. Yes, you can effectively trade these setups yourself, but that's completely at your own responsibility. It always amazes me how people can get so excited about free trading signals. To one extent, I do understand it. It's easy. You look at the picture showing the entry and the stop loss level. If you have the same vision about the position, you can simply copy them one by one in your trading account. Nice and easy, and you don't have to search for setups yourself. The question is though, what will you do if these trading ideas are suddenly no longer available? Wouldn't it be much more interesting to learn how to find similar setups yourself with ChartMill? The workflow I just demonstrated is not difficult at all and allows you to work in a very structured way while developing a personal trading style. Second, as with any strategy, the effectiveness of this breakout strategy will largely depend on market conditions. It works very well in markets that are trending strongly. If the stock markets suddenly make a sharp correction, you will not be able to profit much from this strategy because the stock screener will barely show candidates. That in itself is positive, of course. The fact that there are hardly any candidates makes it clear that market conditions are far from ideal. So keep an eye on our market updates that give a global view of the existing long-term trend. Finally, both free and paid users can set the screen and use it every day to search for breakout setups. However, as a free user, you will be limited in your daily use to the 6,000 available credits you receive each month. Once those credits are exhausted, your account will be limited in use with only the first 3 results of the screener being visible. On this page you can read some tips to use your credits as effectively as possible. Unlimited and ad-free use is available with a monthly or yearly subscription to ChartMill. More info on our subscription page. There you have it. We've come to the end of this video where I showed you my complete ChartMill workflow from start to finish. Hopefully you'll get at least a few ideas out of it. Finally, a thumbs up is very much appreciated, and if you like this video, don't forget to subscribe to the channel. Thanks for watching. Trade safe.